Hello, everyone, and we are back, and we are here with our first guest ever on the show, Joe Burnett. He was the vice president of Bitcoin strategy at Strive. Welcome, Joe. It's great to have you.
Hey, Alec. Thanks for having me on here. Glad to be part of the first episode.
And so, Joe, let's hop right into it. You've had quite a 60 days. It's been a very busy time at Semler, Strive. Why don't you walk us through the deal and how it feels to be finalized with everything?
Yeah, absolutely. It's been an interesting few months to say the least. A similar acquisition from Strive's perspective was a huge win-win for both teams. I think the Bitcoin Treasury company space at this point, scale is kind of more clearly becoming a key, point for the success of a Bitcoin Treasury company. I think if you're one of the companies that wants to kind of follow in the footsteps of strategy and really do this digital credit type play, you kind of need Strive scale. And I think that made a lot of sense for Semler and Strive to join forces to double effectively the Bitcoin balance and then some. But it's been a fun, wild ride, and I think it's been a huge win for both teams.
Why don't you go into a little bit about the details of the merger a bit, Joe? How did it start? Who approached whom? Who's it's always a merger of equals, but what's the reality? Go into some of the details there.
Yeah, so Eric and Matt met briefly. I believe it was at the Unconference in New York, hosted by Tim Kotzman and Ed Julien, which was a fantastic conference. And I believe that they connected and they hit it off. They recognized that the Bitcoin Treasury Company space was super hot, probably from the end of 2024 to summer of 2025. At that point, a lot of the companies in the Bitcoin Treasury space were seeing like MNAV compression, and the simple model of issuing common equity to buy additional Bitcoin just wasn't as feasible or didn't make as much sense as it did in the past when the market was super hot. And so I think Eric admired Matt, and then Matt also admired Eric. Eric has been a Wall Street legend for a very long time. He ran one of the largest telecom and media hedge funds in the world and was incredibly successful. He's an early investor in Netflix and many other companies that you'd heard of. And then Matt being a fixed income guy, professional guy with very extensive background at CalPERS, managing a very, very large fixed income portfolio. I think it just aligned very well when they connected, and they hit it off, and the deal was done in record time, basically.
That's a really quick time, a short period of time between initial intro and then actually consummating a deal. That's really fast.
Yeah, incredibly fast. And I think that what I've noticed, watching Strive, from Semler's perspective before the deal even started, and being inside Strive now for a few weeks, I guess at this point officially, Strive moves very fast, incredibly fast, really, right? Like I think Strive did the reverse merger with asset entities maybe like summer of last year. Then on top of that, they did the Semler deal. Then while the Semler deal was in progress, Strive issued SATA, the IPO of Strive's preferred equity. And then once the Semler deal closed, Strive did a follow-on offering of SATA and paid off almost all of the Semler debt. So the Strive team is executing at like a unbelievably fast pace. I think like the bankers and counsel are kind of amazed at how fast the Strive team works. And I know the Strive team has pushed them to the limits for sure. But yeah, it's crazy to think how fast Strive is moving.
Alec, it was September 17th when we both spoke at the Unconference, but our paths didn't cross for whatever reason, Joe.
Yeah.
Awesome. So Joe, we're going to touch on a lot of things. We're going to touch on the acquisition. We're going to touch on, Strive's future roadmap and a lot of what's taking place. But for listeners who might not know, you've been making the case around Bitcoin for, I think over 7 years. Tell us about how you got into Bitcoin and really started becoming public about it, and realized it wasn't just technology, but the world's most advanced form of monetary technology, which I believe you've called it.
Yeah, absolutely. And I think my Bitcoin story probably really starts around like the 2017 bull market. Back then, I was in college and undergrad, studying computer science and information systems, and I'd always grown up, with a passion for investing. I was very freedom-minded. Like, you may have classified myself as kind of like a libertarian when I was in college, and then studying computer science and information systems. I had always been passionate about like trying to build things on computers. So I like to think that, just with that very like niche background of interest, I was kind of primed to want to learn more about Bitcoin and try to figure out what it is. And so just in 2017, that market, watching the price of Bitcoin go from 1,000 to 3,000, 6,000 to 18,000 near the peak, I was like, what is this thing? This is like so fascinating. I have no idea what it actually is. Like, is it a bubble? Is it a Ponzi scheme? How do I buy it? Looked up like Coinbase. I was like, is Coinbase a scam? Like, I've never heard of this company. And so I eventually, I just dug in and did research because I was something I was interested in. And then that 2018 bear market, I just like really did as much research as I possibly could. I was DMing and messaging people like Pierre Richard, who's, a legend in the Bitcoin space that did a lot of research and from like a monetary economics perspective, and also just from a tech perspective as well. And throughout the 2018 bear market, watching the price of Bitcoin fall down to $3,000, my conviction kept rising while the price kept falling. And, by the time it hit $3,000 or around there, I was like, this just makes so much sense. I feel like it's probably right. And I was kind of hooked ever since, especially once the market started to recover.
Well, as you probably want to kick yourself for not leveraging everything you owned and buying BTC at $3,000. When I first got exposed to it, somebody else asked me to run their fund. That was the first fund in the crypto space called the Bitcoin Fund. And there was no discretionary management, or I would have said no. I thought Bitcoin was the dumbest thing I'd ever heard about. This was 2013. The price of Bitcoin at the beginning of that year was 50 cents. And as I like to tell people, if I were half as smart as I think I am, I would have mortgaged everything and bought, a couple 100,000 BTC for relatively cheap and never done anything else with it. Of course, I was too smart to do that.
So, Joe, why don't you walk us through how you ended up joining Semler Scientific?
Yeah. So before Semler, I was at another Bitcoin company called Unchained, which helped secure over 100,000 Bitcoin. Great company. And I was director of market research there. So always like writing reports, thinking about the market, and just trying to explain Bitcoin to, both TradFi and also just normal people. So I was Eric Semler, who obviously started, or he didn't actually start Semler Scientific, his dad did, but was chairman of the board of Semler Scientific, was doing this zombie zone series where he would say, okay, here's a business that is profitable, it's cash flowing a good bit of money. Its valuation is very depressed from what it could be. It's almost like not growing at all. The management team doesn't really have a clear direction on what they're trying to do. That they may be doing stock buybacks, they may be paying a large dividend, they may be trying to pursue M&A activity, and they're really like the stock. Many of these stocks are just kind of like going sideways for a very long time or possibly down. He thought that they were, and still thinks that they are, incredible candidates for adopting a Bitcoin treasury strategy. And I completely agree with that. And so he would make a post, I would make a video kind of explaining why Zoom or certain, zombie-like companies should put Bitcoin on their balance sheet. And then over time, he kind of reached out to me and he was like, hey, Semler, we've obviously adopted a Bitcoin treasury strategy. obviously been following you and your work and how you explain Bitcoin, and would love to kind of work together on something. And so we had a couple conversations and decided to join the team, and it was a cool experience.
That's great. And I think Semler adopted their Bitcoin strategy in May 2024. I guess, can you, knowing about the company, can you walk us through what that decision looked like and I guess how it came to be?
Yep, exactly. So yeah, I mean, like all the other companies that kind of Eric was pointing out with the Zombie Zone series, Semler in a way was a zombie company. You look back at 2021, that cycle before Semler had anything to do whatsoever with Bitcoin. Semler was $1 billion market cap, publicly traded healthcare company, and it was doing very well. And then there were some regulatory headwinds that occurred, and all of a sudden Semler became the exact profile of that zombie business, where just generating a lot of free cash flow, but there was little growth expectations because of what had happened with various government regulations in the healthcare business. And so Semler decided, hey, let's, instead of doing stock buybacks, instead of paying a large dividend, let's use a portion of our existing cash to buy a Bitcoin and create a Bitcoin treasury. And then going forward, funnel excess free cash flow into Bitcoin itself. And so that's kind of exactly what happened. It was just Eric saw that. Eric actually has said, like, when Saylor, has kind of explained the same thing. Like, Strategy was, this, technology company that couldn't keep up with the Mag 7. They were generating free cash flow, but didn't know really what to do next, didn't know how to compete with them. He thought, when Eric was looking at Semler, he was like, it's the exact same story. He was like looking at himself in the mirror. And so it ended up just being kind of a perfect fit for another publicly traded company to adopt the Bitcoin treasury strategy.
Perfect. So the entity now combined holds around a little over 13,000 Bitcoin. I believe that the strategy outline or the roadmap for Semler was to try and get to 42,000 Bitcoin in 2026 and over 100,000 Bitcoin in 2027. How has the strategy specifically on the accumulation side changed since the acquisition?
Yeah, so Strive's, one of the primary KPIs for Strive, as well as obviously Strategy, is to increase Bitcoin per share over time. So like Strategy, Strive has not issued any, public Bitcoin accumulation targets. Instead, the goal is over the long term, try to increase Bitcoin per share over time, primarily at this point via, issuing digital credit and having like Bitcoin's CAGR outrun the cost of capital on that digital credit. So I think that's the primary plan for Strive going forward, is really increase Bitcoin per share, being open-minded about various ways to do that, but also being like highly conservative and fairly risk averse when it comes to actually increasing Bitcoin per share over time.
Yeah, so let's double down on that, because here's something. This is a topic that Saylor is, I suppose, the worst way of putting it is waffling on now. But the better way of putting it is saying he's reconsidering, and that is he was totally opposed to generating any sort of yield on Bitcoin. 100% my keys, my coins. I'm going to bury it under a rock somewhere, and I'm not going to tell anybody except my wife where the rock is located. Now he's starting to shift. I don't know that he's actually made any official strategy pronouncements of his shift, but at the Unconference where you and I spoke at, that was actually the focus, generating yield on Bitcoin. And he spoke there, didn't exactly endorse it, but didn't throw up on it either. What are your thoughts on generating yield on Bitcoin as opposed to creative ways to financing purchases of additional Bitcoin?
Yeah, I think Matt Cole at this point has kind of like reiterated what I just said mostly, where it's like, right now we're not doing that. At some point in the future, it's definitely possible that would be something that we do. if we can generate like our company objective is to increase Bitcoin per share, and the fact that effectively that means Bitcoin is our hurdle rate. And so if there's a way to do that on an appropriate risk adjusted basis, then that's absolutely something that would be on the table. But the history of Bitcoin is unfortunately a lot of people abusing that idea of generating yield, and countless funds and firms have blown up trying to do that. And so we're open-minded, but just incredibly conservative, and want to make sure we're doing the right thing.
So it's really a question of standard risk reward, and until now the risk has significantly exceeded the reward. I don't mean to put words in your mouth, but trying to summarize what you just said.
Yeah, I think that's exactly right. I mean, you should see my LinkedIn DMs are just filled with people saying, "Hey, like we found a way to generate 10% yield on your Bitcoin. Let's have a call." And I'm open-minded, so I take many calls, and a lot of the calls that I've had is people saying like their strategy is a little unclear, or there's risks that I think that they may not even fully understand themselves. And then there are others that are like closer. I'm like, okay, like I can see that there's risk here. There's absolutely some risk, and perhaps the potential reward is there, and like maybe on a risk adjusted basis it's a little bit closer. But yeah, no, I think like if you just look back at the history of Bitcoin, there's things that have been outright frauds and scams. There's been people, thinking back to like Celsius, where you deposit your Bitcoin and they would lend it out to a miner, and then the miner would hopefully be able to generate an excess return denominated in Bitcoin, which like could work out, of course, but like there's no guarantee that works out. And I think in hindsight, a lot of those Celsius BlockFi, name the rest of them, blew up and didn't end very well. And I also think that if you look towards the future of Bitcoin, it's like, okay, if Bitcoin is digital gold, which for Bitcoin to just match gold parity, it needs to reach like $1 to $2 million per coin at this point. And then also, if you take like the Saylor concept and say like, hey, Bitcoin is digital capital, it's going to extract the monetary premium out of real estate, out of bonds, out of all these other traditional asset classes, then I think you can, make the argument that Bitcoin's CAGRs for the next, 5 to 10 years, if either of those are correct, Bitcoin's CAGR is probably going to exceed 15%, if not significantly more, for that time period. And if that's the case, then the primary focus should probably be on digital credit for the time being.
If you had a chance to goose the return, the CAGR, say from 15 to 20, would that be of interest? Or you would say, no, we don't care what the risk profile is. We don't want to increase the CAGR at all, because we'd have to potentially, we would increase our holding risk, if you will.
Yeah, no, like I said, I think that we expect it to outperform the hurdle rate of Bitcoin, then yeah, it's something that we'd potentially be interested in, but we'd just be fairly risk averse.
Perfect. So I think the yield conversation is obviously a really interesting one, specifically interesting to us for obvious reasons. Getting back to the acquisition. This is widely acknowledged as the first acquisition of a publicly traded Bitcoin treasury company. Tell us how you see the M&A market, specifically with the digital assets, specifically with the Bitcoin treasury companies. Is this a template for consolidation? How do you see this space moving forward on the M&A side?
Yeah, I mean, it's hard to tell. It's hard to predict the future. I tend to think like strategy, as Saylor has mentioned before, is not going to be pursuing M&A activity in the space. For obvious reasons. It does take time, and strategy can buy a significant amount of Bitcoin. Their traditional normal way that they've been doing it for quite some time. In the world of the smaller treasury companies that don't quite have the scale to issue digital credit, and especially if they don't have a profitable operating business, I think it could make a lot of sense for a lot of these companies to begin kind of teaming up, combining the Bitcoin in their balance sheet, and then being able to, work with the banks and lawyers to issue some sort of digital credit product and follow in the footsteps of Strive and Strategy.
And Tim, as someone who has a lot of experience in the M&A space, do you see any similarities to where the Bitcoin Treasury space is now, with this big acquisition being the first one of a publicly traded, Bitcoin Treasury company, and some other industries that you've seen in the past?
Yeah, it's interesting because when Joe was answering that question, I thought to myself, is the dynamic in M&A for Bitcoin different than the usual M&A dynamic? Because there are a couple of reasons general at a high level for M&A. At one level, you can say, look, it's either vertical integration or horizontal integration. And some people would say, okay, there's a financial motivation for this. What's happened with the Semler deal? It's interesting because it's really horizontal integration. You're just buying more of the same level of guys buying Bitcoin. And as he was talking about that, I thought to myself, would anybody want to vertically integrate? That's the first question and answer to yours. And that is, okay, and that would be, Strategy buying a mining company, right? Pick one, any of them. That's actually sort of interesting. I've not heard anybody talking about that, but that vertical integration could be interesting. Such a high percentage of BTC has been mined now. I'm not sure whether that would be really good. More horizontal integration, yeah, that makes sense. But the other thing is financial for diversification. So for instance, would Strategy want to buy into a totally different kind of company? And I just sort of laughed about it and said, absolutely not, because they were a totally different kind of company. They were doing, enterprise software, and now they've shifted completely. The last thing they would do is, since they've gotten very, very specific, integrate, further diversify out of that. So I think the answer is, aside from some additional horizontal integration like this, I wouldn't expect to see much M&A activity among DATs, right? Among digital asset treasury companies. As I talked, though, the one exception to that might be, and you could say this is a different kind, it's clearly a different kind of integration, and that is, let's say, a big bank, one of the real big banks, you get a Morgan Stanley, a JP, a Goldman, they would buy a DAT. That, would be, sort of diversification for them, but still in the same financial holding company, if you will, spirit. But yeah, but all that being said, I don't think there are going to be a lot of transactions because the companies are very specific in terms of their purpose, and their economics are very specific. You're looking at, okay, whether you do yield or not, it doesn't matter. The primary source of revenue, the CAGR that Joe was talking about, is simply from asset appreciation. So it's like turning yourselves into a real estate bank, right? We're going to buy all the real estate possible. We're not even going to lease it out land. It's a land bank. We're going to buy all the land possible. We're not going to rent it out for feed or for agriculture or anything else. We're going to sit on this land bank because we're going to make money with appreciation. Or buying lots of gold is something that's the more typical standard. And with that sort of business, aside from horizontal integration, there really isn't a lot of M&A.
With the few minutes we have remaining, Joe, wanted to talk about the elephant in the room, which is where Bitcoin price is now. And just wanted to hear your thoughts around where we are, how this affects, where Strive is. Obviously, the market's lower. You guys have conviction. This is what you built the business around. How does the price being much lower than October highs change what you guys are doing? Are you accumulating faster? Just would love to hear your thoughts on this.
Yeah, the Bitcoin market is always entertaining, to say the least. Whenever it lulls you to sleep, it'll wake you back up real quick. Yeah, I mean, I think about like the last 17 years of Bitcoin adoption and like what's kind of been happening with Bitcoin. Like, from my perspective, like we're seeing the monetization of a completely new form of money. There are periods when it seems to be happening slow. There are periods when it seems to be happening really fast. I think in the grand scheme of like human history and the history of technology, it's arguably happening incredibly fast. Bitcoin became a roughly $2 trillion asset in less than 2 decades. It's pretty interesting with no marketing department, no CEO, no board. It's quite fascinating. But yeah, no, and so like in the context of kind of big picture perspective, the recent drop, compared to drops that we saw in 2025, like is a little bit more extreme. I think like implied volatility on Bitcoin like spiked up to a height that wasn't seen since like the 2022 bear market low. So like, and volatility obviously did spike, and everyone kind of in the community recognizes that. But I also think that still, if you look at the historical volatility of Bitcoin, it's still trending down. The recent move that we saw was nothing out of the ordinary for Bitcoin, and I think that with the hype, the monetization of Bitcoin that we're seeing, and Bitcoin growing at a 30 to 50% CAGR over certain periods of time, and perhaps into the future, the Treasury model, the way that Strive is set up by issuing digital equity with no margin call risk, no liquidation risk, and the ability to withstand this extreme volatility. That's exactly like the reason why Strive and Strategy have pursued the amplified Bitcoin model that they've pursued, right? The history of Bitcoin is you go 10x long on Bitcoin if you want leverage Bitcoin, and you blow up, or you put your Bitcoin as collateral and you borrow against it, and you buy more Bitcoin, and there's a liquidation price, and you blow up that way. And so I think like the innovation around a lot of these treasury companies is to be able to take that amplified Bitcoin position, know that Bitcoin is an incredibly volatile asset, and then whenever Bitcoin does fall 50% or 70%, the strategy is still sound. It's underwriting that risk that has historically occurred in the Bitcoin space. Obviously, long term, we're huge Bitcoin bulls, and we think Bitcoin's going to go higher. But short term, it's so hard to tell. But that's exactly why the capital structure of Strive has been set up the way it's been set up.
Well, let me take your thesis, Joe, and kind of disagree, but actually make it better. And that is, your thesis was that Bitcoin volatility is going down, and you're absolutely right. And this is sort of an exception in the last 3 months. I'll take issue with that. I don't think it's an exception. The reason is I don't think you can analyze Bitcoin volatility in isolation. So take Bitcoin volatility and apply it to gold volatility, right? And then the thesis becomes really strong that Bitcoin volatility is going down relative to gold volatility. 10x, 20x, 50x multiples when it started, and now it's going down. If you don't use an absolute measure in isolation like you did, but measure Bitcoin volatility against gold or silver volatility, in the last 3 months, it's actually gone down relative to the prior 3 months, because Bitcoin was actually more stable in the prior, 6 months than gold and silver were, because they were edging up. And then 2 Fridays ago, silver lost 20%, gold lost 7%. And then silver continued. It lost almost 40%, and it's been bouncing around like crazy. So if you measure relative volatility, which I would argue is far more relevant as opposed to looking at relativity or volatility in isolation, Bitcoin volatility is still going down, even over the last 3 months, which is really quite astounding when you think about it, because what happened to gold and silver is astounding. So volatility in the entire world is skyrocketing, and Bitcoin is doing basically what it's done in the past. Bitcoin volatility relative to, call them traditional assets, or as you said earlier today, normal assets, that's actually even a much more persuasive argument, and it makes Bitcoin an even better haven than the way you describe it using your thesis.
I also think that like we're in a really fragile world where debt-based fiat money and massive government spending is making the system entirely more fragile over time. And whether it's great recession that we had, or the March 2020 COVID crash, or something that we can't foresee, it's not unreasonable for volatility in the traditional system, which I would incorporate Bitcoin is trading against the dollar, so therefore Bitcoin is going to be correlated with a lot of assets that are also priced in the dollar. So like the volatility could spike temporarily, but I do think that over time, like Bitcoin's volatility will continue to trend down.
The longer term thesis you're talking about, fiat money, I think is definitely true. I don't think, however, it's got much to do, or if anything to do with the volatility of the last 15 months. What we're seeing is a different kind of volatility. I don't think that anybody really had thought about. The world order, if you will, there is built on a lot of formal rules, but I don't think until Donald Trump became president in the U.S., people realized how many informal rules there were. And so now we have a president who doesn't pay attention to those informal rules, or actually tries to take them down. And in a way, it makes the world even more fragile, because everyone's been focusing on what are the formal ways we have to function, and not looking at the behavioral restrictions, informal restrictions, right? And suddenly, by upending those informal restrictions, the world has revealed itself to be much more fragile than people thought. Take the Western world, OECD or NATO; those were viewed as pretty much immutable institutions, right? The fiat equivalent of the blockchain. Now suddenly, with all of the hue and cry about Greenland and other things, people are starting to really question some fundamental building blocks of the current economic system. And I think the understanding or the realization of how much more fragile it is, even than hardcore TradFi traditional finance guys realized, that is starting to sink in. And that's why you're seeing the greater volatility. And suddenly BTC in particular, crypto in general, maybe, but Bitcoin in particular seems a lot more stable than it seemed to be even 18 months ago, because of short-term trends, not longer-term trends.
Yeah, I think that's a good point.
Awesome. So really quick, Joe, I really only have 3 more very short questions for you. And I want to be respectful of your time. So the first question is, what's going to separate the winners and the casualties in the Bitcoin Treasury market moving forward?
Yeah, it's a great question. I mean, I think generally there's 2 models that Bitcoin Treasury companies can do, and I think both could be successful. One is, have a real profitable business that generates a lot of free cash flow, and you funnel your free cash flows into Bitcoin, and you pair that obviously with the Bitcoin Treasury. Like, I think that works, and that can withstand pretty deep bear markets. Obviously, in fact, you may even want deep bear markets if you're a positive cash flowing business. And then the other model is the amplified Bitcoin model, where we issue digital credit, buy additional Bitcoin, and as long as Bitcoin's CAGR outpaces the cost of capital, then you can expect that model could perhaps do pretty well. And so I think that the companies that are kind of don't have either of those, or don't have the scale to issue digital credit, like those may be the ones that struggle, and perhaps maybe they'll combine forces. But yeah, I do think you need one of those. You either need to be kind of an amplified Bitcoin position, or you need to be a real profitable business funneling your free cash flows into Bitcoin.
And my next question for you is, end of 2026. I think I know what you're going to say, but do you think that the price of Bitcoin will be higher or lower?
It's so hard to know. I mean, I think it's almost impossible to predict. I would still call this like short term.
Oh, Joe, don't wimp out. Don't wimp out. Come on.
I would say higher, but I still would say, it's so difficult to predict like short term Bitcoin price action. So, there's no guarantee that it's going to go up or down this year. But
yes, this is not investment advice. Do not take this home. Do not act on it. Yes. Come on. I was doing a podcast for a while called Out on a Limb, and I made specific calls, and in every subsequent podcast, I kept a scorecard for whether I was right or wrong. Again, clearly not investment advice, but I was batting about 750, so I was doing okay. So and it's like, take a position, man, take a position. I hate it when people, well, you can't predict. I mean, we all know you can't predict it. We all know that, it's you can't take any of these predictions to the bank. But I like what Bernstein came out with yesterday, where they said they called for a 150K at the end of the year. And I like that. I think that's a really nice balanced prediction.
I'll be very happy with 150K by the end of 2026.
Oh my God. I think we all would, but except the occasional shorts out there. But I think most of them have probably taken their money and gone home at this point in time.
So Joe, to wrap this up, tell people where people can follow your work, where people can stay up to date on what Strive is doing, and also where people should look for their Bitcoin news.
Yeah, absolutely. Thanks for having me on. It's a great episode. Glad to be on the first episode. But yeah, you guys can follow me on Twitter or YouTube. Just search Joe Burnett or Joe Burnett Bitcoin and should pop up. But and you can learn more about Strive at strive.com. We have our Bitcoin dashboard there as well. So definitely check that out.